Let's bring in Jeff DeGraff from Renaissance Macro Research. Jeff, great to see you as always. So break down for us what we're looking at in terms of some of the key levels. And I guess one factor we've been talking about quite a lot of late is seasonality, and perhaps that's why September was so sloppy.
Yeah, I think, September historically is a sloppy month, Ralph, and, really played to script. You've got, obviously, some of the concerns out of Washington. We've been overbought. You started to see some of the data not come in as robustly as expectations. So, we thought back in August that we were set up for some type of pause, not a massive correction. I think we've got that. We had a little retest today from those lows a couple weeks ago. And I think it's, good news and setting up bullishly for the fourth quarter. I mean, seasonality really sets up well for the fourth quarter. And I think particularly cyclicals versus defensives are in a pretty good spot as well.
Talk us through what you're expecting on the yield front. Clearly, the rise in yields has been one of the factors pressuring stocks. Do you expect that to continue, or will we kind of level off here?
Well, I think you've got a trend in yields that's upward sloping. That's good news, actually. It should steepen the curve. Keep in mind the Fed, while they're talking about tapering, they're still going to add something like $420 billion to the balance sheet over the next 6 months or so. So we're expecting yields to move up higher. I don't think it's going to impact stocks in terms of the averages negatively. I actually think it's good news, not bad news at this part of the cycle to see yields moving higher. It should be good for cyclicality. And I think that's what you're going to see is this rotation, very similar to what we saw in the first quarter, where long duration assets start to lose their relative attractiveness to some of the other names that are out there. Those tend to be more cyclically inclined. They tend to have a little bit more of a value bias to them. And we think that that's set up pretty bullishly for the fourth quarter here.
So you're not a fan of the NASDAQ and the tech trade?
Well, I think on a relative basis, I mean, it's hard to argue with the trend, but they've, Sarah, if you look at the ETF flows and some of the other things that we monitor just to get a sense as to where sentiment is, I think the expectations there are too high given what we expect to see out of the overall market and the economy. And I think that's what the yields are telling you, is that the economy still underneath the surface is pretty good. And as yields move higher, that's going to put pressure, relative pressure on the NASDAQ, particularly some of those high-flying names, not necessarily the FANGs. That becomes a little tricky because obviously you've got mega cap names that are at the top of that index, and they're not nearly as expensive, or the term that we use is concept finance. Their concepts are actually proven, so it's going to be a little bit different. But we would say on a relative basis, they're going to be underperformers for the fourth quarter most likely.